Welcome back. It is Wednesday. Don't know what the fuck that was. And we're gonna get into today's price action and the trade that I took. I took one long trade today, um, and one winner, as you can see here. Um, just gonna go over the reasons why I took it, the model that I used, some of my notes on it, psychology during management, all that. I'll go over the news as well. We'll look at the other markets at the same time. So we've got the S&P and the Dow, which has actually dropped now, which is quite interesting to see. But yeah, so going into the day, this morning I was just I cleared all my charts and I was just marking out key levels, um, you know, mainly being, well, after we took out this high here that I mentioned on Monday, I marked out this high, and this high, clear buy side liquidity zones. And on the 4 hour chart, it just doesn't look like price needs to drop lower at the moment, especially considering the daily chart. If we just take the drawings off, it looks pretty set to continue upwards at this point, or at least take this high and tap this here. So that's what I was focused on today. And if we go over to the S&P, you could see price was already above the all-time high from yesterday, and on the Dow, we were already ripping upwards. So overall, fairly straightforward bullish bias today. There were two trades that I had mapped out, and I'll get into my reasoning on them. So my first point of interest, I got on the charts when I got to work, had a quick scan. Like I say, I marked out these highs, and I was looking for sell side liquidity or just like areas of continuation in the trend. We had this 15-minute fair value gap here, which on the 1 hour chart is just like part of this. So pretty much during the London session, price traded down into this, and pushed back up. We then traded back down into it with the S&P sweeping, whereas Nasdaq just sort of created, well, it didn't sweep, so we had an SMT here, and then from this move we got a was it 5 minute break? It's a 30 minute. Can't remember which one it was. It was a 15-minute break of structure pretty much. And so the ideal entry today would have been in this retracement here, with the stop below the fair value gap, targeting the full liquidity point, or the final target up there for 7.7 to 1. But I decided not to take this trade, purely because it wasn't in my session time, and I want to stick to my plan, stick to my model of the 8:15 or the 8 a.m. 15-minute candle print, retrace, and move. So the initial move here would have been lovely off this retracement back into the 15-minute fair value gap formed just below the breaker structure to target the London high. That would have been a nice little move as well. So pretty much the same trade, or with the stop just above the fair value gap. That's what I did actually map out, rather than the full target. So we would have gone for a London high like that for a 2 to 1. Very, very simple. That would have hit just before 9:30, 8:45 candle there, 8:30 candle. So that was trade one. I made the note at this point that would have been my favorite setup before New York. And I just wanted to have patience going into 9:30, as red folder news may reduce probabilities, but my bias was bullish. In terms of the red folder news, we had non-farm employment change at 1:15, which is 8:15 New York, and we had PMI and job openings at 10 a.m. New York. So going into the 9:30 a.m. session, price pullback. I was just watching how the candles were reacting to see like an initial move. So I wanted to see like the initial break away from this 15-minute candle, and then a retracement into that for the push up. But due to the fact that price was pulling back into this candle at around 9:06, 9:07, I just wanted to wait a little bit longer, and then, because it wasn't quite in the session, just so when the session started, I'll be ready. And my way of doing that was, if price jumps at 9:30, look for a possible entry on a further upward retracement and a PD array required. So in terms of that, if we look at the 9:30, 9:25 candle there, I pretty much got in at 9:31. So it was a bit early, but the fact that all of these bullish confluences were aligning, I was pretty confident in the bullish bias today. It was nice price action and overall lovely move. So, we created this big gap here at 9:25. Price sort of tapped it once, and then during the open, we had this big wick up, and then price came back down into this 1 minute fair value gap created. As you can see, 1, 2, 3 candles there. I pressed buy at this point, and due to spreads, I was put in just a little bit above the fair value gap. So it's not the end of the world, but as the trade was running, I was watching like with the initial volatility at the 9:30 open just to see what was going on. And then we got a nice push up at 9:33, 9:34. So literally, how many minutes was I in this? 4 minutes and 11 seconds for the whole trade. And we made £180. So overall, very nice, can't complain. And then, I just took 60% of the trade off at TP1 and closed the rest at TP2. This was the previous daily high. That was my initial target, just below these other highs here, just to secure profits. Like, I don't need to catch the full move. I just need to manage my risk. So you can see at the time I placed this trade, it was a 2-to-1. And then within a few minutes, once we got this initial push upwards, so I think it was about here, after I took TP1, I trimmed the stop loss to this line here. And then that was leaving the trade at, let's just zoom out a little bit. I left the trade at a 4.29 to 1. So that was nice risk to reward. And then I closed the full position for 3.6 to 1. So overall, a very nice, very, very nicely managed trade. And I'm happy with how I did this today. And I'm happy with the patience that I had. So from TP2, I closed around this candle. We had a pullback, and then price just continued upwards gradually. And as you can see here, we're slowly pushing towards this, which I believe we'll take in the PM session. But again, price doesn't necessarily have to go there. So like I said, I just wanted to secure some profits. So in terms of position sizing, I did 7 lots today. The initial position looked like that, £138 stop for 281 TP, 2.08% risk. And then once I trimmed the stop to here, 62, and then we take off 4 lots. We had three lots running. So we had a £26 stop after securing £79, 14 pence profit. So either way, the least amount of money that I could have made today was like £50, 53 pounds, £52, something like that. But then again, I just decided to just close the position because you don't need to be in it. I'm at work, you know what I mean? Just take the profits and yeah, enjoy it. So had I left this position running to, this first line here, that's another 184. Second line, 256. And if we went all the way to the top here, 535. So I think if we had the full position on, if I left the full position to go today, it would have been 7 unit. I think it would have been like 1.2 grand, and we'd still be in the trade. So it'd be like 1.25, and we'd still be in the trade running at about £969 floating profit. But as nice as it is to look at that, I can learn from it. When the bias is clear, yeah, fine. We can maybe reduce the amount that I take off or just leave a runner. Do you know what I mean? But at this stage, I don't need to do that. I just need to build up the account and just gradually grow it. So there's a balance. There is a balance for sure. But like I say, either way, I'm happy with today. As you can see, great management to take profits and out before the Asia high to secure profits. Lovely trade and executed with patience and a plan. So price took this and then reversed off it or had a slight pullback. And yeah, simple as that really. Like S&P sort of done similar, but the draws aren't as clear, especially as we were already above all-time high. We retraced into this fair value gap here, and then we just got the move up. So with the Dow at the moment, have we got an inverse? 30 min. It's not massively clear. Anyway, yeah, we won't worry about the Dow at the moment. But yeah, like I say, we secured 454 pips for £180 profit, putting us up £283.23 on the week. So pretty lovely so far. I'm very happy with this. And then on the day, as you can see, £180.07. So yeah, it's nice to have that little buffer going into the week, going into the year. I don't necessarily need to trade for the rest of the week now. I'm going to expect, a slight pullback tomorrow. Just for the fact that, we typically see, we tend to see like a reversal on a Thursday if it expands on a Wednesday. And it makes sense, especially on the S&P, you got this imbalance down here. On the Dow, whoops, too many. On the Dow, we've got this, is that 5 minute? Got that 5 minute imbalance there. We've got relative equal lows in yesterday's London session. So yeah, we'll just have to see what we got going on. Tomorrow is unemployment claims as usual for US and NFP on Friday. And yeah, I'm not going to trade Friday. I've decided this week I'm not trading Friday. But yeah, tomorrow I'll have another look around this model. It may be that we even see, we had the low of the day created at this, at the London low. I don't know what the high of the day is going to be. It could still continue up. So we'll have a look at the range there. We could see previous daily high to previous daily low set up, play out. But then again, it all depends on how the market decides to move. Is that everything? I think that is everything for today. But just to summarize, took profits. I closed more than half the position, covered my profit, reduced risk very quickly, and treated this like a scalp in line with the 8 a.m. 15-minute candle model. And yeah, price could have run higher. I don't need to catch that at the moment. as I get more comfortable with this model, I will aim to leave a runner going. But even if I was to leave like one runner, one unit, and stop at break even or just above break even, if that was to go all the way to the top there, that's only £179. Like it's a little bit more. Like it's quite a nice amount more, but it's still, it reduces the probability that, like, no, sorry, it reduces my win rate percentage just because there's more risk involved and you're expecting a full move to happen every time. When, as we all know, the markets have the mind of their own and they tend to take you out. So, all that being said, very happy with today. We'll move forward into tomorrow. Not going to trade Friday. And yeah, I'll catch you after tomorrow's moves. Trade safe, trade smart, and in a bit.